restart our class. So first I'm going to give you a lecture about the Audit Analytics. So what is Audit Analytics? So basically, generally speaking, the Audit Analytics is the use of data analysis technologies in the audit process. So by using the advanced data analysis technologies, the auditors can use them to gathering, identifying, analyzing, and interpreting various kind of information in the organization to help them to provide the appropriate assurance to the organization. Also, data analysis can help the auditors to fulfill their responsibilities about the internal control assessment and their compliance assessment. So first, let's take a look at the benefits that data analysis can bring to auditors. So first, very intuitive benefits that it can bring to the auditors is that because it automates some kind of auditor's manual work, so it can improve the efficiency of the audit process. Like it could improve the productivity. So in order to fulfill one auditor's responsibility, maybe we don't need so many auditors to do that. So this means that after we introduce the data analysis technology to the audit practice, then the auditors will lose their job. It doesn't mean that, because in the traditional audit, auditors are in charge of doing a lot of manual things like checking the inventories, like manually comparing the financial reports, or manually comparing some accounting records. Well, by introducing data analysis, some of this process can be automated, so auditors can do it in a very short period. And using data analysis, they can identify more like exceptions or abnormal things. Then the auditors will focus, the audit resource, like the auditor's time, will focus more on those identified suspicious things. So it's not after we use data analysis, the auditors will lose a job. It's just we require another different set of skills from auditors that enable them to do the data analysis, as well as we let the auditors put more effort to do some more useful, more important things, like check the causes of the suspicious records, and check what causes those exceptional transactions. And also, by using data analysis, auditors can not only identify the risks or potential risks in the organization, they may also help the auditors to identify some new opportunities for the organization. So it can broaden the auditor's audit scope from just providing assurance on the financial information to making more useful, more strategically suggestions for the organizations, like to help them improve their business process, or to give them directions for their future development. And also, using data analysis, auditors can get more efficient to access the data. For example, in the current or in the traditional audit process, the auditors, when they need to access to the data, they are heavily relying on the IT person. So sometimes it may take them like a few weeks to get auditors the data they want. And also, in some cases, the data the auditors obtain is not the real data they want. So by using data analysis technology, the auditors can directly access the organization's data. So they will avoid this wait period for the IT person, and also they can be more confident about what kind of the data they are working on. So they know that they are working on the correct data. And then the data analysis can help the auditors to examine the whole population of the client's data. It's not just like today, we are just choosing a sample. So you know that when we are do the analysis based on a sample, they will introduce a kind of audit risk, is that the sample may not represent the whole population, or the center may not include those anomalies or exceptional transactions. So when we are working on the whole population of the client's data, so this kind of audit risk will be reduced and the audit quality will improve. And then since data analysis has been proposed for a while, their role is evolving along with time. So previously, it is very specialized technique that only IT auditors are doing this kind of stuff. While currently, it becomes an essential technique that is very valuable in the majority of the audit procedure. While in the future, we expect it to be fully integrated throughout the whole audit cycle in all the audit stages. And we expect the auditors to have the appropriate level of competency and appropriate level of skills to do the data analysis. So that's why we are introducing these technologies, and we are teaching those audit softwares in this class. Okay. So along with the role of the data analysis evolve, the approaches to do data analysis change as well. So traditionally, those data analysis have done like randomly and manually by the auditors. So that means that, for example, when auditors are doing a test, they may think that, well, to do this test, maybe I can use some data analysis software, some tools to do this. Then let's do this using the tools. And if the auditor think we don't need to do this technology, to do this tests using those software, then he cannot do it. So it all depends on him. It's very randomly choice, and it's a manual process. Well, now we could try to automate this process and to set some kinds of audit tests as the standard test, so that every time when the auditors are doing their audits, this standard test will automatically triggered and run. So this kind of like the periodically, in every audit, the auditors will do this test, and this process is automated. And this is one type of automation of the data analysis approach. And another automation of data analysis approach is what we call the continuous approach. So it's like we have discussed this in the continuous auditing and continuous monitoring in our previous classes. So it's just like when every transaction is input into the system, it is automatically checked by all these standard audit tests. So it's just like these tests are doing in a continuous base. So the transaction, if they doesn't complying with this test, or it cannot pass this test, it will immediately be identified and be reported to the auditors to do the investigation, or it will be declined by the system immediately to prevent the further loss that this transaction may cause to the organization. Okay. And for those continuous manner, all the transactions that in the key business process is going to be tested. And we also call it the continuous monitoring function. Okay, then let's take a look at how the data analysis can be applied to different audit procedures. So first, of course, it can be used in the analytical review procedure. So basically, if the analytical review procedure is performed at the audit planning stage, it will be like a preliminary analysis of all kinds of organizations' data to identify the trends and the patterns in the data, so that we can see whether there are any potential risks or emerging risks in the organization, so that we can focus on those risk areas and put most of our audit resource on to investigate those risky cases. And also, the data analysis can be used to test the internal controls. For example, there are two ways for the data analysis to be applied in internal control assessment. And it can be used to assess 100% of the transactions to see whether all the transactions are complying with a certain control rule. Or it could be also used to test the 100% of the transactions to see whether there are any transactions that doesn't have any control rule associated with it. So this means that this transaction has not controlled by the organization. And then in the substantive testing, the data analysis can be used to generally test the completeness, the validity, and the correctness of the data. And then it can also be used to test, to identify the fraud risk indicators. Actually, the fraud detection is a major area that for the application of data analysis. And in my following slides, you can see that we will have some examples to show you how to use different data analysis to identify fraud indicators in an organization. And then in the general analysis, then the data analysis could be used to do the general analysis of the organization's data. So in this case, we're not just focused on the risks in the organization. Also, we're identifying the opportunities and other things that we can see from the data. And all these kind of things identified by the data analysis should report it to the management. If we identify some problems in the internal control systems or in the organizations, then we need to provide the suggestions for them to address these problems. And so that will also be included in the audit reports. And then previously, what we have discussed is about how to use data analysis to analyze those financial information like transactions, the accounts payable or something like that. And then besides the financial information, some data analysis technologies can be used on those non-financial information. Like you may know there's a technology named text mining that can be focused on to test those textual informations like news press and the organization's other documents. And to explore the potential risks from those textual information. Also, we can take advantage of those system event logs to check the business processes or internal control processes to see whether there are any deficiencies in those processes and how we can improve these processes. So those are the application of data analysis technologies to those non-financial informations. It could help auditors to check whether we have enough segregation of duties or whether there are some problems in the system configuration settings or there are any access control problems in the organization. Okay, then let's take a look at how the data analysis can be used in different stages in the audit cycle. So you all know this, you are familiar with the audit cycle, right? So auditors start from the audit plan development, and then they prepare the data, and then they test the audit objectives developed in the audit plan, and then they do the review and reporting, and then the next time they start from the planning again. Okay. So basically, data analysis technologies can be used in all these all the stages in the audit cycle. For example, in the planning stage, it could use it to do in the preliminary audit, preliminary analytical review procedures to identify the data-driven risks or emerging risks, so that the auditors can develop an effective or efficient audit plan that focus on the areas that deserve the highest concern, that have the highest concern. And then in the preparation stage, like is the data collection and the data access stage, like we have discussed before, it can allow the auditors to access the data more efficiently, and also it can provide the higher confidence of the data validity for the auditors. And then in the testing stage, it can help the auditors to test the whole population of data, so it can reduce the audit risks. And then finally, every findings the auditors have identified using data analysis need to be included in the audit report, and also in the review stage, like we sometimes required by the audit standards. Then another auditor needs to review and check the auditor's work to assess the audit quality. So in this stage, we could also use data analysis technologies to help the auditors to check the quality, to assess the quality of the previous auditor's work. Okay, now this figure just shows the current usage of different data analysis technologies in different audit procedures. We can see that it compares 4 different kinds of different general kinds of audit technologies: the spreadsheet, the databases, the purpose-built data analysis technologies, which are those softwares that designed specifically for auditors, like ACL and IDEA, and then the other data analysis technologies. Those are mostly those advanced data analysis technologies, like data mining technologies, text mining technologies, and the other things that we will discuss later. And then these 4 types of data analysis technologies are compiled through these 5 audit procedures, like the control analysis, data analysis, substantive testing, continuous controls monitoring, and continuous auditing. We can see that through in all these 5 procedures, spreadsheet is not surprisingly to be the most widely used data analysis tool. So actually, this is a good news for us, is that for those small and medium organizations, they don't want to invest a large amount of money on the data analysis softwares. They can use spreadsheet to do at least some level of data analysis to help them their audit process. And then the second widely used technology is the purpose-built data analysis technologies. You can see here, those also have been used a lot. So that's why we are going to teach you. We teach you those softwares in this class to make you prepared when you got a job, so you can know how to use this software. And the least used technologies, you can see this, are the others, which are those advanced technologies. Also, this means that we should continue to introduce these technologies to you guys, so that you will get familiar with this, and you will see how powerful these advanced technologies can help the auditors to do their work, so that you will try to use it when you're in your work in the audit practice. Okay, now that's we have finished the general introduction of the data analysis. So now let's take a look at some specific technologies. So first, the data analysis technologies that can help the auditors to understand the client's data. There are generally two kinds of these technologies. The first one is this descriptive statistics. So it basically use some basic statistical measures to show the distribution of the client's data, so that you know what are the location of the majority of the population, and then you may be able to identify some outliers that are that very different from the distribution of the majority of the data. So basically, the descriptive statistics are different for the quantitative variable and quantitative variable. But the most widely used descriptive statistics include the frequency distribution. So for the qualitative variable, the frequency distribution is we basically count how many times each value of this qualitative variable exists in the whole population. Okay, so we'll know what value exists the most, and what is the most real values in this qualitative variable. And then we can also do the category statistics, like to calculate some, to summarize some numeric field based on this categorical field. Like in ACL, I remember we have used summarization to summarize the credit card transactions based on the client, or summarize the credit card transactions based on the employees. So this is kind of the categorical statistics. It can give us some general idea of which employees spend the most, and what is the average spending of employees, and we can identify whether there are any employees that spend extremely large amount of money that very, very different from the other employees. Okay. And then for the quantitative variable, those are those numeric variables. We also have several descriptive statistics can be used. First, we also use the frequency distribution, but we just first separate the value of the numeric field into several intervals, and then we calculate how many data points are allocated in each interval. So it also just shows the general distribution of the numeric field. And also we calculate some statistical measure, like the mean, median, like standard deviation, to show how generally this data distributed. And also we have some measures of like the range minimum and maximum to see how spread out the data is. And we have the skew curtices to show how this, to see whether the distribution is asymmetry or not, or whether there are any unusual peaks in the distribution. So basically, this descriptive statistics, most of the measures have been built in ACL and IDEA, so we can using, if you may remember, there is a function in ACL named statistics. So it just show you some measures that has demonstrated here to just give you a general idea of the description, the distribution of the data. So you can get a better understanding of the data, as well as you may be able to identify some obvious outliers from the distribution. Okay, and this distribution, descriptive statistics always combined with some data visualization technologies to show the distribution in a graphical way. For example, the commonly used data visualization include the pie chart. You all should be very familiar with this. You can create it in Excel. And also the column chart, the bar chart is just a vertical expression of the column chart. So this can be used to show the frequency distribution of the categorical data. And so the humans are more sensitive with this graphical expression. So this graphical expression can help the auditors as well as management to identify the obvious anomalies directly from these graphs. And also we have the linear chart, the histogram, which is mainly for the frequency distribution of continuous variables. And then we have scatter plot, like it shows like this. It mainly used to demonstrate the relationship between two variables, just like the pivot table you can create use Excel, so that it compare the relationship of two variables, but it just shows in a graphic way. And then we have box plot. So basically, you can see the box plot include one box that shows the location of the majority in the data. And then you have two whiskers, and the upper bound of the whisker shows the maximum value, and the lower bound of the whisker shows the minimum value. So you can see that, for example, in this box plot, you can see most of the values are located here, but we have some extreme large values that very far from the majority of the data. So maybe the auditors then want to focus on those values, identify those values as outliers and focus on those values. Okay, and there is another interesting plot. It's called the leaf and sting plot. So this plot using the textual expression to express the distribution of data. However, it can only be used for small data set, but for the extreme large data set, it will create like a very clustered stem leaf plot. So basically, what shows in this graph is that the data set, the first digits number of the data set is shown in the right side of this plot, and on the left side of this plot, it shows the second digits of all the data set in this, of all the data in the data set. For example, in this data set, we have five number that between 30 to 40. So we have 30, 31, 32, 34, and 38. And then we have two number between 40 to 50. We have 41, 43, and then four number between 50 to 60, and three number between 60 to 70. So it just also obviously shows how many numbers are in each intervals. But obviously it doesn't work for the extreme large data set. And then we have heat map. You can see here it used different colors to indicate different values. Usually the auditors use heat map to demonstrate the risks in the organization. So for example, the cells shown in red means that the areas that have the highest risk. And then when the number becomes smaller, the color is lighter, and then they change to yellow, indicating that these areas have moderate risk. And then also with the risk become lower, the light changes to lighter, and then finally change to green, shows that these areas have low risks. Okay. And then we can use geographical map combined together with this basic charts like bar charts and pie chart to see different distribution of data in different locations. So this is used to if you have any geolocation data in your data set. So basically, auditors, besides using these visualization techniques to analyze the data, they could also include them in their report to show your findings to the management. So to highlight those abnormal things and those suspicious distributions. Okay, so that's for the technologies that help the auditors to understand the audit data. And also there are some basic analytic technologies for auditors to analyze the data. So you can see that most of these basic analytic technologies has already been built in ACL and IDEA. And some of them we have mentioned in our ACL tutorial, like the summarization, classification, stratification. And for the others that we have not covered in the ACL tutorial, I'm going to cover in the IDEA tutorial. Okay. But there's one basic analytical techniques I want to introduce in detail today is the Benford's law. So I remember in one class, Professor Brennan just briefly introduced what is Benford's law. So do you still remember what is Benford's law? Benford's law defines the possibilities that one number exists in each different digits. Actually, let's see. Yeah, this is the demonstration of the Benford's law. So you can see that for the first digits, the number 1 have about 30% possibility to exist, and number 2 have 17% of possibility to exist. And then when the number increases, the possibility of the number appear in different places are decreased. So do you think what is the logic behind this law? Why? Because I think intuitively, if we think the possibility of different numbers appear in different digits, we may think that they have equal possibility to appear. But actually, Benford's law shows that it is not. So do you think what is the logic behind this? Oh, to the numbers that naturally collected. It means that those numbers that doesn't have that manipulated by human. So for example, if we have a large number of transactions, then it should follow this rule, or just a naturally collected number. So it's not, for example, if we have some number like the check number that's exactly sequential and ordered by the human assigned the check number, right? So in this case, it's not applicable to that part of data. So it's just applicable to the data like this specific 3 types of accounting data. For example, the data that the large data sets that are naturally collected, not human, not any human interview, like the full year's transactions, and those also the data that is not sampled, like the disbursement, the sales and expense, or the data that come from 2 combinations of mathematic numbers, like the accounts receivable that come from number of products sold, multiply price, and the accounts payable that equals to number of items bought, multiply price. So for those kind of data, they comply Benford's law. But now let's show you some kind of data that does not comply Benford's law. So it's the check number data that have assigned numbers, and the number that are influenced by human thoughts that we think we define the specific number, like some sales price. And and also the number that have the built-in minimum and maximum. So basically, the numbers that have a lot of human manipulation or human interview to define the numbers that not conform Benford's law. So numbers that naturally formed will usually conform Benford's law, and that's why. That's also related to the logic before the behind the Benford's law. So it is that, for example, we have a number like number 10, and if we want to change the first digits from 1 to 2, for example, we change number 10 to number 20. So in this case, this number is changing from 1 to 2, and in order to do this, we have to double this original number, right? To double it to make it equals to 20, right? And if we have a number 80, and then if we want to change this from 8 to 9, we just need to increase about 20 or 30%, then it will increase to 90, right? So that in the naturally formed data, like the transaction amount. For example, we want to buy some product that worth $1,000, and then if we try to increase this into $2,000, then that's a large difference. We need to change this the number of products we ordered a lot, right? So if the original order is worth 8,000, and then if we want just to increase it to 9,000, we just need to increase 11%. So compared with the original number, it's not that much increase. So it's easier for those increase compared with when we try to increase it from 1,000 to 2,000. So can you understand that? Also, that's why it only exists in the naturally collected data, because if it's like check number, it's human assigned, so we need to do everything there, so that in this case the number have the same chance to appear in one digit. So we need to assign 1, 10, 11, 12, 13, and then 20, 21, 22. So it have the same chance for 1 and 2 to appear in the first digits. Okay, can you understand it now? Okay. So that's Benford's law, and Benford's law have already been applied in audit for a few years, and there are a very famous case for the application of Benford's law is that there is a bank in Virginia. And there is an accountant. He tried to manipulate the accounts payables or some transactions, the falsified transactions. So he's a very experienced accountant. So he knows that the auditors may easily to identify some extreme transactions, extreme large transactions. So all the transactions he added or falsified those smaller transactions, and then there are not some extreme number. So if you just look at the distribution of the transaction, it follows most of these falsified transactions are in the same as in the major distribution. It's not shown as an outlier because they are not very extreme large transactions. But then he didn't notice this Benford's law, so he creates a lot of transactions that starts with a large number, 7, 8, 9, and then when we apply Benford's law, we see that there is a abnormal peak in those transaction amounts that start with those large numbers. And then the auditors start to dig and to see what happened with these transactions, and then finally they find these accountants who perpetrate this fraud. So this is a case that used Benford's law to identify the fraud. So that's for the basic data analysis technologies that's mostly covered in the ACL and IDEA tutorials. And also there are some that haven't been mentioned before, are going to be mentioned in next week's IDEA tutorial. So now then let's take a look at those advanced data analysis data analysis technologies, which are classified as the other technology that's not that commonly used by auditors. But you will see, I will show you some example. Then you will see they have greater power for the auditors to identify anomalies and identify risks in the organization. So first, let's start with one technology named regression. So if you have ever taken any statistics course, you should be familiar with the regression. So any of you know this? No, you already know. Okay. So basically, the regression is that we try to predict the value of one variable based on the other factors. So in this case, we try to predict the cost of sales based on the sales volume, the sales value. And actually, here we use some historical data, like the data from 2009 and 2010, and we try to build a model to predict the cost of sales in 2011. So using the 2009 and 2010 sales revenue and cost of sales data, we could create this formula to describe the relationship between cost of sales and the sales revenue. And then we use this formula to calculate the cost of sales in 2011. Yeah, because the sales revenue of 2011 is known. So based on the sales revenue, we calculate the expected or estimated cost of sales that in 2011. And then we compare our expectation with the actual value of cost of sales. So you can see that here is those blue circles shows the expected value, and then those red cross shows the actual value. So we just compare these two values and see whether there are any large discrepancy between our expected value and the actual value. The large discrepancy means that this cost of sales number doesn't comply with the patterns or the relationships between cost of sale and the sales revenue that we identified in the previous years. So it can be a suspicious cost of sale number, or but it's not necessary to be like the risk area. It may be caused by some special cases, but then auditors want to focus on those records and then to dig deeper to see what are the causes and whether it's related to any internal control problem or whether it's related to any fraudulent cases. So this is the regression. And then there is another data analysis technology I want to introduce is about the cluster analysis. I think in Professor Lee's IT course you may mention this. Yeah. So just a very brief introduction of the basic idea. So the basic idea of cluster analysis is that it will group the transactions into different groups. So the transactions in one group are similar to each other, and the transactions in different groups are very different to each other. So how the auditors can use these technologies to identify risks or anomalies is that if we find any transactions that we cannot be placed into any group, then it means that it's different from all the other data in the data set. So we need to know why this is this data set, this data point is so different. And also, if we form some very small clusters, like the cluster only have 2 or 3 records, it also means that those records in these clusters are very different from the records in the other clusters. So we also want to know why this happened, and we want to focus on those small clusters. And another thing is that you can see in this example, this actually is a cluster example of, is a real cluster result in one of our projects. We use it to cluster the insurance claims data. So you can see that for some cluster, there shows here, like one cluster is marked by one color. So in the cluster that marked by red, we can see that this cluster, all the records in this cluster are very concentrated, located here in this area, as well as this cluster like purple and yellow and blue. So there are 3 clusters here. We have relatively small number of data points, and this cluster is very large. It covers large area, and there are some data points that very close to the edge, to the border of these clusters. So this is also means that it's very, even though it is clustered into one group, but it's very still different from the other transactions, or the other, in this case, is insurance claims. So this is one example for auditors to use cluster analysis to identify anomalies. And also, there are some other applications of cluster analysis. For example, in some internal audits, for example, in one cluster, in one project that we are working on for a bank. So it wants us to identify the clients that have higher possibility to like decline their payments than not pay their credit card bill. And they want us to find the other type of the clients who will usually pay their bill on time. So in this case, we can use the cluster analysis to cluster the clients, to analyze the clients to see whether there are any natural groups that we can group those clients. And usually we can use these clients' personal information, like their income, their profession, as well as some financial information like their credit limit, their account balances, to build the cluster model to see whether we can find any like groups of clusters that to describe what kind of clusters are going to have higher possibility to decline their payment, and what kind of customers that usually will pay their bill on time. Okay, another case is detect abnormal insurance claims that I have already described. And another example to use cluster analysis is still in the same project we work with the bank, is that they want to introduce or offer some promotions to their credit card holders, and they're not sure how to develop or how to set this discount policies, like how many discounts they should offer for this client and how many discounts they should offer for that client. So we use cluster analysis to cluster their credit card holders to based on their previous behaviors, like financial behaviors, like whether they paid their bill on time and whether they pay the interest or something like that, to identify what kind of clients are more valuable for the bank, so that the bank will offer, based on this description of this client, the bank will offer the higher discount to the client who will bring more revenue to them, and those they will offer lower discounts to those not very profitable clients. So that's the cluster analysis for the internal auditors. And for the external auditors, we have used it in one case to identify the suspicious payment. So basically, we got payment data that we know that each vendors are paid for what. So for example, the company A are usually paid for catering. So it means that it's maybe the catering company, and then the company B are usually paid for stationery. So it's a company offering stationery supply. So we just cluster those vendors based on their payment nature. So if we find that there is one company that are clustered together with these catering companies are paid for like stationeries, or they are paid for something else, then this is a suspicious payment. So we use this to identify those suspicious payments that need further investigation for auditors. Okay, so that's for cluster analysis. And then another technology is the text mining. I think you also get familiar with this in the IT course as well. So basic idea is that it uses some methodologies to analyze this textual information, like the median express, the organization's internal documentations, like their contracts or some textual documents, as well as some section in the financial statements like MD&A, also the management's interview, as well as the Twitter and Facebook posts that are related to the organization are also be analyzed to see whether there are any indicators for the organization's financial performance. Also, in this example, it shows using text mining to analyze the emails that's in the organization. Actually, this is the Enron email. So we know that after Enron scandal, the email are made public. So there are some researchers, they use this Enron email to do this analysis. So it first filter some keywords that are related to the accounting, and also those fraud, or some words that related to this behaviors, and then they use this text mining together with social network analysis to analyze the senders and the recipients of these sensitive emails. So they'll finally be able to identify who is participating in these frauds. Okay, here it also lists some potential data for the text mining purpose. I don't know if you still remember, there is one professor in Rutgers. He is doing text mining, and he tried to analyze the CEO or manager's interview to see whether he can find any indicators for the organization's restatement. So he thinks that he specifically analyzed these stop words, or the words that disinfluence words, like in the interviews. The original assumption is that the managers who have more this kind of stop words means that he's not that familiar with what he's talking about, and he's not very confident of what he's talking about. So he has higher possibility to restate their financial statement. Well, actually, after they have done this analysis, they find that the result is opposite. So this means that the high-level managers who in the very healthy organizations who are usually very busy and he doesn't have time to like practice or rehearsal his interviews or presentations. So that's why he has these fluent words. While for those organizations that have problems, the managers will try to get themselves familiar with this with the presentation content. So he practiced a lot, and so he is more. He has less this kind of words. So this is also some interesting researches that can find some new evidences from this textual data. Okay, so text mining is a kind of technology, like we have discussed, that's focused on these non-financial information, basically are the textual information. Well, here is another technology that I want to introduce. It also focuses on the non-financial information. Specifically, this technology focuses on those event logs that's created by the information system. Like this event log is just similar to the record, activity record. So it records at what time, which one have done what. And then in the next step, and what is the previous step before this, and at that step, it also have an event log to see who at what time has done this. And then in the next step, it's another person at what time have done this. So previously, this process mining has been used to analyze these business processes to see whether the existing business process are complying with the designed business process, to see whether there are any thing need to be changed in practice to make the process conform to their designed process. Also, it can be used to discover the actual existing process. If we don't have any already designed process in mind, then we can try to use these event logs to identify whether there are any process exist natural in the organization. And then we could try to improve it and to design a better process based on those identified process. Well, that's for the internal auditors. They could use this process mining to analyze the major business processes in the organization. So to help the organization to improve their practice, their business. And for the external auditors, they could, if their clients are using the systems to do their internal controls, they could also use this process mining technology to analyze the internal control process of the organization. So to see whether the internal control process comply with the designed one, or whether there are any deficiencies in the internal control process. So whether the organization can improve their internal control process. Okay. So this is the application of process mining. And another kind of data mining technique that's not widely used in auditing is the association analysis. Actually, this is the one that we are working on to try to use it in the auditing. So the basic idea of association analysis is that it was originally used in marketing to analyze the items, the products that's purchased by the clients. So there's a very famous case related to this is that researchers find that the clients who usually purchase diapers have higher possibility to purchase beer. So this relationship can help the the marketing people to do the layout of their product. For example, they will place the beer next to the diapers to increase the sales value of the revenue of the beer. And so this association analysis basically is trying to identify the commonly appeared combinations of certain items. So it can only be used to those kind of like itemized data. So if we have certain of things that are listed in one record, that we may want to use association analysis to analyze it. And so the basic result of association analysis is that you will create some rules. For example, you can see here, ones who buy diapers will cost the ones who buy beers. So it usually have two values after the rules to describe the representative and the strongness or reliableness of these rules. So we call the support and the confidence measure. So the support measure here shows that it equals to 0.5%. It means that how many times these two things appear together in the whole data set. So you can see that basically in the whole data set, this diaper and beers, they appear together in 0.5% of the data set of the whole population. And then here, this confidence to express how strong or how reliable this rule is. It shows the people who buy diapers, there are 6% of them also buy beer. So it shows that if the strongness of this rule is 60%. And auditors can take advantage of this is that if we have identified some very high confidence rules, for example, if we find some rules that have 99% confidence or 98% confidence, it means that in the majority of the data set, they were complying with this rule, but only a few records that doesn't comply with this rule, that do not comply with this rule. So this is the kind of anomalies in the data set. So the auditors can focus on those records that do not comply with those rules, and then to figure out the causes of this anomalies. Let's see. Okay, there's one example of using association analysis is that if we are auditing for example, manufacturing organization. In this case, the organization may need to purchase some materials from the vendors, right? There may be some common combination of the materials. For example, material A and material C are usually purchased together. And then if there are, in a few cases, we don't purchase material A and C, we purchase material A and D together, then we may need to think what happened with this purchase orders and why it doesn't comply with this commonly existed combination. And besides this, the data that have the purchase order data, like the purchase item data, it can also be used in the other kind of data that as long as it has these itemized things. For example, in one of our projects, I use it to analyze this healthcare fraud. So I have some healthcare claims that in each claims, it have some certain diagnosis and the procedures the tests that has been done. So I just use association analysis to see whether there are any commonly performed procedures that are related to certain diagnosis. And then we find several, actually about 100 rules that to describe the commonly combined diagnosis and procedures. And using these rules, we can identify some abnormal cases. For example, if a diagnosis of a patient is like heart disease, the commonly related procedures are some like operations related to the heart or to the veins that are related to that next to heart. So if we have one procedure that to deal with the like foot or deal with the like eyes, then but the diagnosis is still the heart disease, then that may be that can be considered as a suspicious healthcare claim. Okay. So this is the application of association rules. And another technology, as I mentioned before, briefly, is the social network analysis. In our previous example, it is combined with the text mining to analyze the communication data like the emails. Also, it could be used to analyze this other type of communication data like this text information or the calls between employees. So the association analysis basically used to identify some except or suspicious or unusual relationships between individuals. So it can be used to identify the suspicious relationship between individuals that inside an organization. Or it can also be used to test the unusual relationships between employees in the organization and some related parties outside the organization. Okay. And here in this chart, it shows that using the social network analysis together with the process mining to see the relationship between individuals that involved in one business process. So we can compare this result with the responsibilities of the individuals to see whether there are any suspicious, whether there are individuals who played like suspicious roles in the business process. Okay. So you can see basically in this figure, each red circle represents one individual, and the lines between them represent these relationships. So we can use it to test like segregation of duties or something related to the roles of the individuals in the business process. Okay, finally, the last technology I want to discuss here is about the continuous auditing system. So this is a continuous data analysis system. So basically, this is like the integrated system that all the data analysis technologies can be used or integrated in this system. So you can see we account all the informations in our organization, like the sales information, accounts receivable, human resource, material, ordering, accounts payable. And then we use all this information to create different models. And then when one transaction or one new purchase order they put into the system, so we will compare it with this. We will put it into the system into the model. For example, if we have a regression model, like we will compare our expected value with this actual value when it's just come into the system. So if we think that it's in the acceptable range of our expectation, then we will accept this transaction. Or if we think that this is an exceptional cases, then we will reject it, and we will generate an exception alert to the auditors. So the auditors can start from this point to analyze those the exceptional transactions. So before that, everything is automatic. Auditors do not need to do anything before that. It just start the audit based on the exceptional alarm. So no exception alarm, no audit. And then also we will also generate this alarm to the management. So if the auditors and management, after investigating these specific cases, if they think that it's just caused by some special cases or special situations, then it could change some settings in the system to continuously improve the system. So next time, the same transaction in the same situation will not be identified as anomalies. Okay, so this is like a self-learning system. It could improve it by itself. Then I'm going to ask you to install it right now and show you some quick functions of IDEA. It just takes a few minutes. So you can download the IDEA software in Blackboard. So please go to Blackboard first. And then in your course document, you should find a folder named IDEA. Okay. Course document. Okay. So in this IDEA folder, you can see two links. Here, first we want to install IDEA software, so you just click IDEA software. Okay, so it will bring you to a Dropbox page, and then here on the right upper side, you can see there is a download sign icon. So you just click it and click download as zip. Okay, so it may take 1 or 2 minutes to download. Just save it. So it may take a few minutes to download. Oh, by the way, please do not use Google Chrome. It will not allow you to download. Please use Firefox. Yeah. When you use Firefox, you will be able to download the software. Any question? IDEA, then you should extract it first. Right-click it and extract all. Just extract it here. So if you didn't extract it, you will have an encounter or error message when you try to install the software. So to install the software, you just click, there is a file named IDEA 8.0. So you just double-click it and click Run, and Next, and accept the terms, and the Next, and install. It will, and then yes, it will automatically install. Okay, after you finish installing IDEA, you will, if you click the System button in all programs, you will find this IDEA folder, and if you click it, the third file named IDEA is the software, and then you can click it, and it will show here. It will ask you to check update. You just choose no, and then view any introduction, video, just view it later. So this is the basic interface of IDEA. Okay, like in ACL, I've already import the data, the IDEA data into the IDEA. So I build an IDEA project for you. And you can also download the project from Blackboard. So you just go back to Blackboard. And in the same folder, you see besides IDEA software, there's IDEA data. So you just click it. So it brings you to another Dropbox page, and then you click download. Still download as zip. Okay. And save file. Okay. It will download very quickly. And then now you can see it. Still, you need to extract it. So you can extract it just to the desktop. Extract it to, for example, here I choose desktop. Okay, and then extract. So after you do this, you will have two folders, one named accounts payable and one named accounts receivable in your desktop. Okay. Any problem with this? No? So you all have these two folders, right? Okay. That's good. So let's go back to IDEA. So similar to ACL, when you first open IDEA, it will ask you to open an existing project or start a new project. Here, as I said, in IDEA, I already built a project for you, so you can just open it. So to open an existing project, you just choose File, and then Set Working Folder. Okay, and then go to the desktop. For example, let's first find the accounts receivable. Let's first start from accounts receivable folder. Just click accounts receivable, double click it. It will show that no items match your search, but it doesn't matter, just click OK. So you will see this project properties shows here. It is the project I have built for IDEA. Okay, then you just click OK. So on the left-hand side, you will see that there are two data sets, two tables in this project. One is accounts receivable and one is customer master file. When you double click it, the data will show in the middle. Okay, and on the right-hand side, there are some shortcuts functions. Okay, and here like in ACL, I've already imported these two tables for you, but I also want to show you how to import data from different formats into IDEA. Actually, there is very interesting data import format. The import process for IDEA is that it can import some PDF reports into data. So basically, those in reality, in some organization they may not have everything in digital format. So for some receipts or some kind of documents, they only have that paper-based. And then they can scan those paper to make a PDF format, to make a PDF file. So IDEA give you this opportunity to extract the informations that from the PDF file to form a table in the IDEA projects. So now I'm going to show you how to do this. Specifically to import a table, you just still need to click File, and then Import Assistant, the first one. You just choose Import to IDEA. Okay. Click it. So if you go to the accounts receivable folder, you can see that there are the IDEA project inside and IDEA data inside this folder, as well as the original raw data. you can see that we have a Microsoft Access data for accounts receivable, and we have this named tax data for the customer masters. But if you click on it, you can see that it's not a regular tax file. It's actually like reports file, but it's stored in the text format. Okay, so now I'm going to show you how to import this report into IDEA. So you can like follow me to do this, or if you want, you can just watch me, because the data is already in IDEA. Okay. Okay, so the first step in to import the data in IDEA is we need to choose the format of the data. So as we know, it's not exactly text data, it's a print report or PDF. So we just choose this one. And then in the file name, we need to find the file we want to import. Just click this. You can see that there is only one file match the format, which is a customer file. Then we just click it, choose it, click open, and then click next. Okay, here you can see it shows the report. And the first thing we want to do to import this report is that we need to choose one record and to show it to IDEA that this is a record, the example record that we are going to import in the IDEA. So here we just choose, we just use our mouse to cover the information in one record. You can see we cover from the first line, including all the fields like account number, name, address, credit limit, and every line that containing the information we want to import. Like for the address, it has 5 lines, so we covered all the 5 lines. And here it shows that we need to create a standard layer for this example, for this sample record. So we just choose yes. After that, you can see that this sample record is shown in between 2 yellow lines. So we will basically work on this sample record to show, to define the different fields in this data. So first, we need to tell the IDEA what kind of characters or what kind of information is included in this report. For example, in this report, we have some characters, or we have some numbers. So we need to tell IDEA what is the characters, what are the numbers. So we can do it just for the first field. For example, here for this accounts number field, we just click on the space right above this first value here, above the first yellow line. And since the first digits of accounts number it's a character, so here in the menu we can choose T for this character information or a text information. And then for the next three digits, they are number. So we just choose N to represent the number, the numeric field. And so it's the first one is text, and then the next 3 are the numbers for the account number. So we define it as TNNN. Okay, so we don't need to do this for every value, for every field, because we just need to show an example for IDEAs. What is the text? What is a number? And now it already know. So now we can start to extract information from this report. So we start from the first field, which is account number. So to extract all the account number, we just do it in this sample. We just click it. You can see that there there is a box, little box shows here, and then we adjust the border of this box to make it cover all the to make it cover the values or the digits of account number. So you can see that after we do this, all the account number, values of account number are highlighted. So it means that all this highlighted content are going to be extracted into IDEA. Okay, so now we just need to go through all this report to make sure that every value in account number has been highlighted so that we don't miss any information from this report. Okay, so we just scroll down to make sure that every account number are covered. Yes. Okay. So here on the right-hand side, you can see there is a field details. There are some fields for you to fill in. So it can, for the field information, we can design or define the names and type for this field. For example, for a name, we can just call it account number. Account number. Okay, and the type. Because the account number, we are not going to calculate the account number or to do mathematical operations, so we just choose it as character. Okay, so that's fine for the first field. Now let's start to define the second field. And in a similar way, we just first click it to make a little box, and then adjust the border of the box to cover all the value in this field. Okay, we just adjust it. Because for some people's name may be longer, so here in our sample, we try to leave some spaces for those longer names. Okay, so let's still go through to make sure that every name has been fully covered, highlighted. Okay, so now every name has been covered. So still, we can name this field and define the type of this field on the right-hand side. For example, this name is just the name. The name of this field is just a name. And still is a character field. Okay. Then let's just go to the next one. It's the address. The same thing. We just click it, make a box, and adjust the length of the box. Okay. But you can see that for the address field, the value has more than one line. So now we can only cover the information in the first line. What should we do to cover the other information in the other lines? Is that also on the right-hand side, there is you can see attribute field. That there is a function named the multi-line. So now the default value is no. Now we can change it from no to yes. So you can see that all the informations in all lines are covered here. And then again, we need to check whether all those long addresses are all covered or highlighted. Ooh, there is someone, you can see that there is one word that are not, there are some letters that are not covered. So we just change this to make it longer to cover everything. Okay? And also we need to name this field. Its address, obviously. And then the type is characteristics, of course. And then finally, for the credit limit, we just need to do the same thing. And then we adjust it to cover all the value and to make sure that all the credit limit information are highlighted. Okay, and then the name of this field, we still need to define the name of this field, like credit limit. And the type should be numeric. Okay? Okay, now we have finished defining all the values or the informations in the data set. And then we just need to click this Save Layer, this green check icon. Click it, and then it is saved. And then there is for the third icon here, it's named Import into IDEA. So if you click it, it will start to import the data into IDEA. So we just click it, and then it asks me whether to proceed with import. Then we choose yes. And then it asks me to save the template, then choose OK and save the template. And then just choose Finish. So it shows that all the information are imported into an IDEA. You can see we have account number, the name, the address, and the credit limit. So actually this is very useful function. So especially when in reality there are it's very possible that there's some like accounting information are still in the paper base, like the receipts or some confirmation letter or some confirmation things. They are still in the paper base, so we can just scan it and use this function to extract data from it. So we could use this data to work with the other electronic data, like the accounts receivable or accounts payable data, to complete our analysis. Okay, so this is an example to show you how to use IDEA to import those PDF files. Like as you may remember, for the accounts receivable file, it's a Microsoft Access file. So I also want to show you how to import it here. Also go to File, Import Assistant, Import to IDEA. Then we choose the Microsoft Access. And then we just choose a file name. And you can see that the accounts receivable 2008. So there's another Access file. It's called Project Overview. It's a file that's created by IDEA, so we don't need to choose that. So we just choose accounts receivable in 2008 and choose Open, and then click Next. So you can see that basically there are two tables in this Access file. However, according to the name, you can see that the second table is a copy of the first one. So we can just choose the first one to import. And then here you can have some options to choose how many records you want to import. So you can only import the first few lines, or here we want to import all. So we choose Scan All. And then you just click OK, so that you can see that the Microsoft Access data is automatically imported into IDEA. So this is pretty easy, as like in the ACL. And then, so this is for the accounts receivable projects. And then I want to show you how to import the data in the accounts payable project as well. So to do that, we just choose File, and then set working folder to change the working folder from the accounts receivable folder to the accounts payable folder. So in the IDEA, it's just is all the project information, different project information are stored in different folders. So we want to change a project, we just need to change another folder. So here we just choose that working folder and go back to the desktop, change the accounts payable folder, and then click open. Oops, what do we have? Okay, let's do it again. Go to File, Set Working Folder. Just click Accounts Payable folder. Oh, just click into it. Okay, and then you click Open. So you will now see the project that's in the Accounts Payable folder. Just click OK. Okay, so you can see that there are also two tables. One is Accounts Payable table. When you click it, it shows in the middle. And one is Authorized Supplier table. When you click it, it also shows here. So if we click into the Accounts Payable folder, you can see that the original format of this two table is for the Accounts Payable is the text file. So if we click it, you can see that this is a real text file. It's not the PDF, like a report. So we just click close it, and for the suppliers, it's an Excel file. Okay, so let me first show you how to import the Excel file into IDEA. So go to File, Import Assistant, Import to IDEA. Just choose Microsoft Excel, and then choose the correct file. It's the supplier, and just click Open, and then Next. So you can see that if in this Excel, it only have one spreadsheet, so it shows one spreadsheet here. If we have more than one, it will show here, and you can import multiple spreadsheets at once. Okay, so for this one, we have the first row as the field name. So here we just click this option, choose the first row as the field name. And we just need to choose OK. So you can see that all the data in the Excel file is automatically imported. That's pretty easy. And then let me show you how to import the text file. Still go to File, choose Import Assistant, Import to IDEA. Choose the text file, and then the file name, just choose the Accounts Payable 2008, double click it, and then click Next. Okay, so you will see the data shows here, and then it automatically define that it's a delimited tab, delimited file. So we just click Next to show that it really is a tab delimited file. So it automatically separated into different fields. You can see. And then we don't have the first row as the field name, so we don't need to click this. And then we'll just choose Next. So here is very similar to ACL. You can type in the field name for different fields. You can, for example, for the first fields, and set this field type. And when you click into the second field, you can type in the field name for the second field, like the third one, fourth one. So it's pretty straightforward, and it's very similar to ACL. So I'm not going to do this one by one field by one. I just want to show you this process. So after you do that, just click, after you named every field, you just need to click Next, and the Next, and the Next, Finish, so that you will see that every data in the text file are imported in ACL or in IDEA, except that we don't set we don't define the name for each field. So these fields are named as default name, like character 1, 2, 3, and number 1, 2, 3, 4. Okay. Okay. So